Good morning, buenos dias, good afternoon to everyone. Thanks for joining me today. Sorry for starting a little bit late today. Some changes in my PC messed some things around. You know how it is, technology. Thanks for sticking around. This is another Trader Bite early nourishment for your trading mind. It is Tuesday, the 16th of May, 2017. It's 8:04 a.m. Chicago time, 9:04 Eastern U.S. time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance this morning, the leader is the Euro FX, up almost $1.11, trading at $1.1095, up 0.9%. Pretty strong move there. Followed by crude oil. Crude oil is trading 49.28. It had gapped up big yesterday on the Saudi/Russian news and has drifted downwards. By the way, for crude, a big level I have that I'm monitoring is 48.59. 48.59 is a key level that is likely to be tested. It's close to the mid of the gap zone for that product, and it's an area of course it's an unauctioned area now. To me, that's an area that's worth watching. I'm expecting a push and a bounce down in there. The overall market stance right now is mixed. We have strength in both risk aversion products, safety products, as well as risky products. We have the Euro stocks following gold. So the pecking order this morning in the products I'm watching is the Euro, followed by crude oil, followed by gold, followed by Euro stocks, which is an index. Then we have the Dow up 48 points this morning. The laggard today is the U.S. dollar and the Euro Bund, and the 10-year note is unchanged this morning. So we were mixed to bullish in coming in today. We have a gap up from yesterday's close, a gap above yesterday's high of 24.0225 in the ES. We're trading 24.03 and a quarter, just a point above yesterday's range. We are right in the entanglement of the measured moves I had mentioned before. Right now, the high of the day is in the upper measured move posted on your flex levels for those that have them. So overall, it's a mixed bag. The big news this morning was there's some geopolitical news. There's some political news, of course, with Donald Trump admitting he has revealed classified information to the Russians. I don't know where that's going to lead, but it's at the top of every financial site there is. But the euro is at 6-month highs. The Eurozone flash GDP posted an inline print of 0.5%. And then also the UK inflation came in really strong, the strongest since 2013. UK inflation climbed to 2.7%, 2.7% year over year in April. This is the fastest gain since September 2013. Other than that, this morning we also had PPI out of the UK, which also beat at 0.1% versus 0%. And then we have April's U.S. April housing starts at 1.17, slightly lighter than 1.26 million. Building permits 1.3 versus 1.27. Also, Iran came in this morning, just about a half hour ago, and said that it supports a 9-month extension of the oil production agreement if there's a consensus among participants. Again, this is the other thing that is pushing oil to gap up. So now it's Saudi Arabia, Russia, and Iran all coming together to squeeze oil higher. But this drift up in crude has been happening throughout the session, so that news was clearly known. We'll see what the inventories report says tomorrow. Anyway, let's move on to what we're expecting for today. At 9:15 Eastern here in just 10 minutes, we'll get the industrial production month on month for April, expecting zero point 0.4 capacity utilization, 76.3 for April expected. And then after the close today, we expect to get ABI crude oil inventories, and that is pretty much it. As far as speakers, at 11:30 we get ECB speaker Nowotny, and then at 1 p.m. Eastern we get ECB speaker Kerr. And that's about it. Let's take a look and see what we expected yesterday versus what we got. Yesterday was just a mishmash of stuff. So the expectation yesterday was for pretty light trading, and the likelihood that we would not end up going anywhere simply because we are inside. We're still inside of this box that we've been in since early or mid April. And the expectation was, yes, we are gapping up. We're likely to pull back down to the top of the range, bounce up, and then go sideways into the close. Was looking for 93, the close to be around the 93 area. That's the primary hypothesis yesterday. Small responsive, big initiative, pushing up, but still remaining within the range of the MC. That did not happen. This was incorrect. Market did not play that out. Secondary hypothesis, initial move up, and then the market gets responsive selling as after the overnight highs taken out, after we push through that 23.95, and then again closing somewhere in the 93 range. Wrong. The good news is we knew these were wrong right off the get-go. The market did not spend much time confusing us. And then the third hypothesis, and it's generally not common for me to look into the third and the fourth hypothesis, but I put those on the table yesterday because of the way we're set up, given the extent of the consolidation here. The third hypothesis is quick initiative up to 23.95, and then a market that starts to trend down into the MC point of control at 23.85 and a quarter, pushing through and then finishing at 23.85 and a quarter for the day. That did not happen. What did happen is hypo 4. The expectation was for the market to sit sideways on the open, and then for it to become initiative and to push to 24.03 or 24.02. Actually, it's 24.0150 is the price I was looking for, 24.0150. That happens to be the hypo that works. Go figure. This is what the market looked like yesterday. We opened at 23.9225. That is this price right here. Let me close these so I can reduce the noise. We open at 23.9250. We push up to 23.9550. So we took out the 95 immediately. So now we have hypo 3, potentially hypo 2 or 3 or 4 in play. Hypo 1 is out. And then the market turns around and makes this big rotation out, up. So we immediately know hypo 1, 2, and 3 are out. Hypo 4 is remaining. So we're looking for a push to 24.0150. Market consolidated, push to 24.0225 through the level that I was looking for by 3 ticks. And then we have a lower high looking corrective back to the mid. The mid was not expected to hold yesterday. I expected it to fall below the mid and start working its way down the stem, and instead it decided to just go completely sideways into the close. For me personally, there was really not a clear-cut opportunity, a high probability opportunity to get long anywhere, especially into new all-time highs. And currently we're trading up in the 24.0250. The market's responding a little bit as we approach the open. So that's how we ended up. Those of you asking, down here, this chart here is tracking the volume delta split between small lots and large lots. And the cutoff point for large lots is anything that is 42 contracts or higher is considered a large lot. Anything that is 41 contracts or lower is considered a small lot. And early on, as we watch what happens here, so if I project this down, okay, try to make it as straight. As I project this down, you see this move that is initiative on price, and this move is occurring on small lots. But look at what the large lots are doing. No participation at all. Actually, slightly negative participation. I posted this chart on Twitter in real time yesterday, and then we hit the 2400. We hit the 2400, and once we did, we went sideways. So did everybody else. But notice as we hit 2400, the large lots start becoming active, lifting the offer, and that's what the delta measures. It measures how many contracts, volume, not price, how many contracts, not price, not ticks, how many contracts lifted the offer minus how many contracts hit the bid. In other words, it's measuring the magnitude of the volume magnitude of aggressive buyers minus aggressive sellers. Okay, so you could see here as we approach 2400, suddenly these large lots become active. Of course, this is a major strike, the 2400. It's also a top that we hit the other day. It was a weak high, and then we go sideways. And then we go sideways, and once we break higher, we see large lots pull back, but then become active, and they start to move upwards throughout the rest of the session with the small lots. In general, it's hard to come up with ideas as far as concrete explanations as to what's happening here. But in general, I have noted that the small lots tend to move towards the large lots by the end of the session. At some point, the small lots and the large lots generally touch or intersect during the session. Why the 42 and the 41? This is a statistical study based on prints that have been re-aggregated or recomprised based on their tick ID. In other words, these trades have been broken up by the CME, and this feed takes and puts them back together. And so we're able to see what the real size is, even though algos out there break up the trades. We cannot detect all of them. But this is a proxy. It's not something I'm trading off of, but it gives me an idea of where the volume is coming from, somewhat. The market's trading the high in the overnight high, following the number that just came out. Here we are. The overnight session was completely sideways and contained until about 6 o'clock this morning, 6 o'clock Central, and then we started to push through yesterday's high, and we are attacking the high yet again. Price is the overnight inventories are long in price and volume. We're looking for a small attempt at the low, and then a continuation higher as the primary hypothesis. However, new all-time highs in the past, as I've talked about again and again, have very often pushed through the high, and then we would get a responsive rotation back to the MC point of control. I'm not sure if today's the day, but I'm looking for, again, an open auction. Today I'm not looking for an open auction. I'm looking for an open test drive, an open rejection, or an open drive, one way or the other. So I'm looking for a quick, strong push on the open, and I'm looking for responsive selling down into yesterday's point of control at 23.99.50, a retest to the 24, and attempt back up. And I'm looking for the market to push back into yesterday's range. This is the primary hypothesis. If the market follows what it's done with new highs recently, this is what I'm looking for. We do have a gap, but it's not much of a gap zone. It's not much of a gap zone that we're dealing with here. So I'm looking for the response to kick in. If we were gapping way up here, then I'd be looking for an open auction and an initiative or a push, a continuation push higher. So that's the primary hypothesis. Secondary hypothesis, I'm looking for a pullback that comes in early down into the 2401, 2400, and then I'm looking for the market to start working its way back up towards the 2410. This is not very likely. The market is likely, given that we initiated this new all-time high off a gap, the market's likely extended in the short term, so I'm looking for it to respond before we start pushing new highs. Those are the two primary objectives of the day. Of course, there's a third and a fourth and so on, but I'm out of time. I want to remind you on Thursday, I'm doing a webinar at 4:30 Eastern for Futures IO. The invitation for that is in the description of this video. Just hit the YouTube button, or if you're on YouTube already, look at the description. It says invitation. Register to attend. We'll be talking about metrics, just a lot of really important things that need to come together to help improve your performance, hopefully. Good luck, and I'll catch you soon. Take care.